Hello and welcome to Blytheway Business News. Today we're joined by Mark Learmonth, who's Finance Director of Caledonia Mining. Now, regular viewers will know that Caledonia operates the Blanket Mine, the Blanket Gold Mine in Zimbabwe, and has an enviable history of paying very regular dividends. But today, we're not talking about Blanket Mine, well, we might talk about it a bit later, because some very exciting news out of Caledonia this morning regarding an agreement to acquire a new mining asset or claims over a potential new mining asset, the Glen Hume property in Zimbabwe. Mark, morning. Welcome onto Blytheway Business News. How do you actually find a new mining property in Zimbabwe?
Well, it's actually not very difficult. We've got a man on the ground in Zimbabwe, the redoubtable Mr. Adrian Sinovich, who appears to know just about every gold mining property in Zimbabwe that exists. So he's got a very extensive database, which we've been through. And also, don't forget, and this is one of our sort of key attractions for looking at Zimbabwe, being probably Zimbabwe's biggest gold producer. We do get people approaching us all the time with with proposals and with requests to look at stuff. So finding assets actually in Zimbabwe isn't our problem. It's chasing them away. It's chasing away some of the stuff that really isn't very good. That's what takes a lot of time. But no, we must have looked in detail at probably 24 assets.
So you've appraised those and you've decided upon Glen Hume. Tell us a bit about it. What was it about Glen Hume that ticked the boxes for Caledonia?
Well, Glen Hume is one of probably four projects that we really want to get our hands on. So it's the first one. It's the first one that's rolling off the production line, so to speak. And what our criteria that as we've set out are quite straightforward. Most of these properties don't have existing reserves and resources. The people who own them, they're private individuals or very small companies. They don't comply with reporting requirements, and so there's no resource base that we could use to justify an acquisition. Okay, so what we do is we go and look at what's there, and this property does have some small scale production, which gives us comfort that we know that proves there's gold there too, because there's gold coming out of the ground at the moment. But let's be clear, the existing operations are not operations that we would seek to operate ourselves, but it gives you an indication that something there. We can visit the property. We visited the property. We can take ore samples. We can get a good idea of what's happening there and what's going on. We've flown aeromagnetic surveys, so we've got a reasonable idea as to where the good targets are. What we do is then we basically identify what we believe is a conservative but realistic exploration resource target. And it's got to be at least 1 million ounces to make it worthwhile. We're not looking for small scale stuff. So about 1 million ounces that could support an initial operation of say 50,000 ounces a year. If it's much less than 50, you don't get the economies of scale to make it worthwhile. And so it ticks those boxes. We've agreed to, we've paid $2.5 million to secure an option over the property. And we've got 15 months to go exploring. Happily, there are some drillers on the property right now who we're repurposing to suit our objectives. So 15 months of exploration, that'll cost about $1 million. Anytime during that 15-month period, depending on what we see, we can exercise the option to buy the asset for a further $2.5 million. So the reason we've gone through this option structure is twofold, really. The first is it deals with that moral jeopardy, whereby if you don't agree the acquisition price up front, the risk is that we will use our money to identify a resource base, which we then got to pay more for. Okay, so you got to sort of slice through that immediately. And the other reason for going the option structure is we want to secure the asset, but we don't necessarily want to own the asset until we decide we want to own it. We don't want to be stuck with equity positions in, if we choose not to exercise the option, we don't want to be stuck with equity positions in small, troublesome operations that absorb management time and cost us money. So that's why we go through the option route.
Okay, and look, I don't want to get ahead of ourselves, but it's $2.5 million up front, which is not a huge sum. It's 15 months of exploration, but strategically, I mean, how significant is this step for Caledonia, which has traditionally been that one mine operator at the Blanket Mine? Is this a significant strategic step for you?
Yeah, I think it is. It is financially at this stage, as I think you've identified it. It's neither here nor there. But I think it is a very important strategic step because it shows that we mean it when we've been saying for some time that we intend to use the blanket mine, which is within a few months now and beginning to generate really very substantial amounts of cash. We use the blanket mine as a springboard for new opportunities and new projects in Zimbabwe. This Glen Hume property falls right in the middle of the sorts of things we've been talking to the market about, i.e. getting our hands on brownfield exploration projects where we can do some work over the coming years and hopefully find as the first step towards becoming a multi-asset operation.
A multi-asset operation. So, but focused on Zimbabwe. So, yep. Blanket, Glen Hume. Can we expect anything more in the coming months? Are you looking at others?
Absolutely. As I said, we've got a short list of 4 assets that we like. So this is the first one. So we've now got 3 left. Discussions and negotiations and things continue in respect of the other 3, and I'm very optimistic that at least one of the remaining 3 will land that one as well very shortly. These things typically take a long time. Just doing simple things, Tim, can take a long time in Zimbabwe. So we've been on this Glen Hume deal. We've been talking to them for about 18 months for a relatively simple transaction. So things do take a long time, but I'm very optimistic that we'll certainly land another one before the end of the year.
Exciting times. Now, Mark, I can't let you go without talking a little bit about the blanket mine, because you mentioned it earlier. There's at least one city analyst this morning who's describing the blanket mine as your cash cow. I'm not going to expect you as finance director to make any kind of dividend forecast, but analysts are talking about Caledonia's quarterly dividend increasing into the future. So look, just update us. I know you've recently announced the completion of the equipping phase of the central shaft, which is, you funded yourselves. That's going to transform the mine. What are we looking at in the coming weeks on the central shaft, coming weeks and months?
Well, there's a race on. There's a race on right now to get the existing headgear, the old headgear, replaced with a new headgear that will be fit for purpose for production. And the race is on to get that finished. And you may have seen some pictures of this enormous crane, this 570-ton crane or something that we've shipped up from Johannesburg, which is at the property at the moment. There's a race on to get that finished before Christmas time, because the crane driver and all the crew want to get back to Johannesburg in time for their Christmas holidays. So that is the race, and that has to be done pretty much by the 18th of December. We're on track for that. And then again, this is the analysts aren't wrong. The analysts are finally beginning to believe what we've been saying for many years. When this central shaft is finished, which will be commissioned next year, the cash generation will increase because we'll be producing more gold. Our costs should come down. Over the course of the next couple of years, our capex will also fall very substantially. So at the moment, we're spending anything from sort of $20 to $23 million a year. Over the coming years, that will fall quite smartly down to about 10, and then the run rate will be about 5 million. So that leaves us with much more cash to play with, and we've been very clear what we'll do with that cash. Part of it will go to reward shareholders, of which I'm one, and the rest will be redeployed into projects just like Glen Hume to build a pipeline for further growth. And that's exactly what we're doing. We're saying we're doing exactly what we said we'd do. So there should be no surprises.
No surprises, but exciting times. Thank you, Mark. That was Mark Learmonth, Finance Director of Caledonia Mining. Caledonia is listed on the AIM market in London with the ticker of CMCL. It's also listed on the New York Stock Exchange. Currently has a market capitalization of around £150 million sterling. And as we heard there, not only producing gold and dividends from the blanket mine, but now moving into being a multi-site operator with further exploration in Zimbabwe. That's all from Blytheway Business News for today. Thanks for watching.